Hi guys, it's Martin Bay here. I'm the CEO of ASFA and I'm pleased to welcome you to ASFA's Beyond 2000 webcast series, also known as ASFA Unplugged. In this series, we look at the lasting impacts of COVID-19 on the superannuation landscape, and we talk to industry leaders about the challenges that it presented and the challenges that lie ahead for us. Today, I'm delighted to be joined by guests from the NAB, and I'd love to welcome Ray Attrell, who's Head of Foreign Exchange Strategy, and Jamie Bonnick, Head of Investor FX Sales APAC at NAB. And we're going to discuss NAB's FX survey, which is now in its 20th year. Gentlemen, welcome to you both.
Thank you, Martin.
Thank you, Martin.
Jamie, first to you. Can you tell us a little bit about the scope and the focus of this year's FX survey in light of what we saw with COVID this time last year?
Thanks, Martin. Yes, so the 2019 survey, just to paint a picture here a little bit, was the most extensive that we'd had of the 20-year history that we've been conducting the survey. So we reached around 61 face-to-face interviews with superannuation leaders. We covered assets under management of something around 1.8, 1.9 trillion of institutional funds, which we think is around 90% of the potential on the industry sector. So the scope when the 2019 survey was very broad and very deep. 2021 surveys had unprecedented interest already. And as you highlighted, I think COVID happening in the last 12 months has really changed the landscape a little. And I think that people are always interested to see what their peers are doing, how they're coping, how things changed with their own decision-making process, what happened in terms of investment profile and so on. And so when you add into that mix, I think the APRA heat map and some of the performance benchmarks, you can see why people are interested to participate in the survey and then, more importantly, find out what their peers are up to at the end of it.
Jamie, are there any new areas that you hope to explore in this year's survey compared to 2019?
Yeah, ESG is always featured in our survey, but I think that there's renewed interest there simply because I think people are a little uncertain about what is a zero carbon emissions investment landscape looks like in 2050. So how are people positioning for that? What changes are they going to look at in the next sort of 5 to 10 years there? I think a real focus for the sector as a whole in the last couple of years has been the change in investment allocations between listed and unlisted assets. So we'll explore that. Managing liquidity last year was problematic for a lot of people, so we've got a couple of questions around that area. And of course, we've segregated the last 2 surveys. We've done a pretty good job at segregating some of the questions and some of the answers into smaller funds versus larger funds. So we look to see that if you're a smaller fund with, say, assets under 10 billion, you can look at how your peers answered that sector from that sort of grouping, or those over 20 or over 50. So exciting survey this year.
Excellent. Ray, in terms of the 2019 survey, can you remind us of what the highlights were, and do we expect to see similar findings in this year's survey?
Mm-hmm. Sure. Well, I mean, a couple of the key findings, I guess, a couple of the sort of banner headline numbers that featured in 2019. One key finding was that a majority of funds, I think it was 72% of the funds surveyed, expected to increase their exposure to international assets in terms of the share of their total funds under management that will be allocated offshore. The benchmark that came out of the 2019 survey was, I think, 41% held offshore, and that was up slightly from the 2017 survey. So we're certainly keen to learn whether or not that expectation of a higher allocation to international assets was realised. And obviously, if the answer is yes, then intention is to further increase exposure to international assets. So that was one key finding. And then I guess another always of interest is to do with the sort of hedging of those international exposures from a currency perspective. And the key finding in 2019 was that the average hedge ratio that was applied to international equity portfolios came down between 2017 and 2019 by a full 10 percentage points, from 39% in 2017 to just 29% in 2019. So clearly, keen to see whether or not we've seen a continuation of that trend. And so I think that will be one of the other the key questions that we're keen to probe.
You mentioned the hedge ratio. Is that the main game in town, or do we expect people to look through other lenses?
Well, actually, it's not. So I should qualify what I've just said, I think. And that is that one of the other key findings of 2019 was that increasingly funds are thinking about currency in terms of a target or a desired exposure. So it's, it's a little bit of simplification to say how much exposure do we not want versus how much exposure do we want. But there was a clear shift in terms of thinking about currency in terms of a desired target exposure, even if from a practical point of view, the management of that, whether it's a hedge ratio or a target exposure, tends to be managed via adjustments to the hedges that are applied to international equities in particular. So again, we're keen to see whether we see a furtherance of that trend as well as whether there's an overall increase or decrease in that desired currency exposure.
Lots of commentators, Ray, would have us believe that strategic asset allocation is the magic sauce that makes Australian superannuation funds so successful. What did we learn in that respect in 2019?
Well, I think what came through quite clearly, and I think you'd have to see this in part as a function of this move between 2017 and 2019 towards the zero interest rate sort of sovereign bond environment, or in some cases negative bond environment. There was clearly a preference or a desire on the part of many funds to move into more into illiquid, or should I say unlisted asset exposure, whether that's private equity, private debt, property, infrastructure, etc., which clearly sort of, I guess, illustrates the point that in a near zero bond yield environment, a lot of funds are willing to sacrifice liquidity, in the interests of hopefully higher returns. Now, given the events of Q1 2020 and the huge problems that were created for funds in terms of the ability to rapidly mark to market illiquid assets, and when liquidity obviously shot to the forefront as a primary concern for the industry, I think it'll be fascinating to see whether there's been a kind of a fundamental or strategic rethink about enthusiasm for unlisted assets. So that's another part of the survey. I'm particularly interested to see how that's played out between 2019 and 2021.
Watch this space. Jamie, when do you expect to launch the survey, and how can funds that are viewing this webcast, how can they participate and get involved?
We hope to begin interviews in May. We typically wrap up sometime around the end of June, and publication is in August, normally in line with our Superannuation conference. I'll remind participants that, as always, all of the answers are confidential, and we use them only as analysis for the peer reviews. Funds that do participate, however, get an individual breakdown and a one-off session to go through a deeper dive on a lot of the data that they provided that we wouldn't ordinarily share with the public at our conference. But if you want to be involved and you're curious, have some questions, we have a dedicated email site, which is at nabfxsurvey@nab.com.au. And as always, I think I can always reach out to our partners at ASFA as well.
Excellent. Look, Jimmy, it's really important from our point of view that we get as many people as possible into this survey. The turmoil, as you said, of the last year in terms of liquidity, in terms of posting collateral, people moving investment options to cash, means that this whole issue of hedging and FX has probably never been more important as we go forward. So we're really hoping that as many people as possible get involved, and we'd encourage people to participate. Great to see the results in September at the NAB Superannuation Conference, but we're also hoping that you guys might come back on here and share some of the insights with us, and indeed at the ASFA conference in November on the Gold Coast. So Ray and Jamie, thank you very, very much for joining us today, and best of luck with the survey. And again, please, everybody, if you can at all, get involved and participate. We need the data. I think the industry would benefit enormously from it. So thank you very much. Thanks, gentlemen.
Thank you, Martin.